Hello everyone and welcome back to our channel. Today we are diving into two detailed examples of the domestic minimum corporate tax in Turkey, which will help you understand how minimum tax calculations apply in specific cases. We have previously discussed the basic concept and now we will be applying it to actual scenarios to see how it works in practice. In our example 3, we will look at minimum corporate tax in case of commercial balance sheet profit, non-tax deductible expenses, and all of these as you can see here. And we have a corporation, CAŞ, and the AŞ is joint stock company, as you know, with a commercial balance sheet profit for the 2025 fiscal year of 4 million Turkish lira. The non-tax deductible expenses for this period amount to 800,000 Turkish lira. And during the same fiscal period, the corporation benefits from various exemptions and deductions, which are as follows. So a dividend exemption of 2 million Turkish lira as per Article 5 of Law number 5520 and 800,000 Turkish lira exemption for capital gains from the sale of shares, a 500,000 Turkish lira exemption for earnings from technology development zones, and 100,000 Turkish lira and for the R&D deduction. So accordingly, the minimum corporate tax for the corporation will be calculated as follows. In this example, the goal is to calculate the corporate tax and compare it with the minimum corporate tax. Let's break down each. The starting point is a commercial balance sheet profit of 4 million. And non-tax deductible expenses amount to 800,000 and these are added to taxable income because they are not allowable as deductions. These are non-tax deductible expenses. So several types of income are exempt from taxation and you can see this subtraction here. And these exemptions reduce the taxable income base by their respective amounts. And the company has a prior year loss of 400,000 that it can deduct from this year's taxable income. And certain deductions are available to the company to further reduce the taxable base. And these are subtracted from the income after applying exemptions and losses. And you can see the corporation tax base, the formula here. And corporate tax is calculated by applying the standard 25% rate to the tax base, you can see, and we will have 200,000 Turkish lira. And the minimum corporate tax is calculated at a lower 10% rate and on the pre-deduction income base. And after applying all deductions and exemptions, the calculated corporate tax for CAŞ is 220,000 Turkish lira, and which is below the required minimum corporate tax threshold, and therefore the corporate tax payable will be adjusted to 220,000 Turkish lira. And now let's move on to another scenario with different exemptions and incentives, which will give us a clearer understanding of how the minimum corporate tax applies in more complex cases. In example 4, we will look at minimum corporate tax in case of these. You can see commercial balance sheet profit, again R&D deduction, real estate sale gain exemption for debtors to banks, and also investment deduction. And we will look at AŞ now, joint stock company, so which reported a commercial balance sheet profit of 12,500,000 Turkish lira for the 2025 fiscal period, and the non-deductible expenses amount to 500,000. This corporation also benefits from certain exemptions and deductions. For example, a real estate sale gain exemption of 4 million Turkish lira as the asset was transferred to a bank due to the debt to the bank. An R&D deduction of 2 million, and an investment deduction of 1 million carried over from previous periods. So additionally, DASHE holds an investment incentive certificate for an investment completed in 2024, and for the 2025 fiscal period, the taxable income subject to reduced corporate tax under this certificate is 4 million Turkish lira with a discounted tax rate of 5%. So accordingly, the minimum corporate tax for the mentioned corporation will be calculated as follows. In our example 4, we will calculate both the standard corporate tax and the minimum corporate tax here. And you can see the table. The starting profit here is 12,500,000, and these expenses, I mean the non-tax deductible expenses, amount to 500,000, are added to the taxable base, and this example includes a significant exemption here, real estate sales income exemption for that repayment, and it was 4 million. This amount is subtracted from the taxable income. And there were some discounts, R&D discount here and investment discount, and these discounts further reduce the tax base. And you can see the formula here, the corporate tax base calculation. And the taxable income subject to the reduced tax rate under the investment incentive certificate, and it is 4 million Turkish lira. The reduced rate is 5%, so you can see the total here. And this is calculated by applying the standard 20% tax rate on the incentive base income. And this amount is not collected due to the incentive, and the remaining 2 million is subject to the general tax rate of 25%. So total calculated tax combines the reduced tax and general tax amounts here, and minimum corporate tax is calculated at 10% of the base without some exemptions. So from the minimum corporate tax calculated for DASHE at 1,100,000 Turkish lira, the 800,000 not collected under the investment incentive certificate is deducted, resulting in a minimum corporate tax of 300,000. Since the calculated corporate tax of 700,000 Turkish lira is higher than this minimum, no additional tax payment is required under the minimum corporate tax application. And these examples illustrate how different exemptions, deductions, and prior losses affect the minimum corporate tax calculations for corporations in Türkiye. By understanding these detailed calculations, companies can better plan their finances and ensure compliance with tax regulation. Thanks for watching.